Have you ever wondered what the different types of money are? This question might seem simple, but the answer is a complex tapestry that weaves through history, economics, and social structures. Today we're going to untangle that tapestry a bit and explore the four main types of money that have been used throughout history and are still in use today. First, we have commodity money, tangible goods used as a medium of exchange like gold or salt. Second, there's fiat money, which is what most of us are familiar with. It's the coins and bills in your wallet. Third, we'll talk about fiduciary money, a type of trust-based currency like checks or promissory notes. And last but not least, we'll discuss commercial bank money, which is digital and represents the largest portion of money in many developed economies. So, are you ready to journey through the fascinating world of money? Stay tuned as we delve into the world of money and its various forms. First up on our list is commodity money. Now, what is commodity money exactly? Well, it's a type of money that derives its value from the commodity out of which it is made. The worth of commodity money comes from the material itself. Intriguing, isn't it? Let's think about gold coins, for instance. The gold from which the coin is made holds value due to its rarity and the labor involved in mining and refining it. This value is intrinsic, meaning it's inherent to the gold itself. Whether the gold is in the form of a coin, a nugget, or a gold bar, its value remains. Silver, copper, and other precious metals also fall under the category of commodity money. These were used widely in the past, and their value was accepted universally, making trade and commerce possible across different regions and cultures. But commodity money isn't just limited to precious metals. In fact, throughout history, many different commodities have been used as money. From shells to salt, from tobacco to tea, if it was considered valuable and relatively rare, it was used as a medium of exchange. Now, you might be wondering, why aren't we using commodity money today? Well, while commodity money has its advantages, it also comes with its fair share of drawbacks. The value of commodity money can fluctuate based on the supply and demand of the material. Also, it's not always practical to carry around a bag of gold coins or a pouch of salt to pay for your groceries, right? That's why over time societies move towards more practical forms of money. But the concept of commodity money is still critical to understanding the evolution of our financial systems and the nature of money itself. So that's commodity money, valuable in its own right and a concept as old as civilization itself. Next, we come to something you'll be very familiar with, fiat money. Now you might be wondering, what on earth is fiat money? Well, let's take a little dive into your wallet. Those dollars, euros, or yen you see, that's fiat money. Fiat money is a type of currency that a government has declared to be legal tender. This means it's recognized by the government as a suitable form of payment. But here's the catch. Fiat money is not backed by a physical commodity like gold or silver. Instead, the value of fiat money is derived from the relationship between supply and demand and the stability of the issuing government rather than the worth of a commodity backing it. So how does this work? Well, imagine you're at a coffee shop. You hand over a $10 bill for your morning caffeine fix. The barista takes your money, gives you your coffee, and everyone's happy. But why did that piece of paper, that $10 bill, just buy you coffee? It's just paper after all. The answer lies in trust. When you handed over that $10 bill, both you and the barista trusted that it had value. That trust, that shared belief in the value of the money, is what makes fiat money work. It's a trust-based system, and this trust is usually backed by the government that issues the currency. Now, this might seem a bit fragile, and in some ways it is. If people lose faith in the government backing the money, the value of the fiat currency can plummet. But, when managed correctly, fiat money provides a stable and flexible form of currency. It's also worth noting that most of the money in the world today is fiat money, including the US dollar, the euro, the Japanese yen, and many others. So when you're spending those bills, you're using fiat money, a trust-based system that keeps our economies running. Our third type of money is a bit more complex. Say hello to fiduciary money. Now you may be thinking, what in the world is fiduciary money? It sounds like a term from a law degree program, but it's actually not as intimidating as it sounds. You see, fiduciary money is a form of money that includes things like checks or banknotes. So let's delve a little deeper. Picture this. You have a check in your hand. It's not made of gold, silver, or any precious material. It's just a piece of paper, right? But this piece of paper holds a certain value. You can use it to pay for things or even deposit it into your bank account. But why? Why does this simple piece of paper have such value? Well, the answer lies in trust. When you have that check, you trust that the bank or whoever issued that check will honor it. You trust that when you walk into a bank or a store, they will accept that check as a form of payment. That's why it's called fiduciary money. The term fiduciary comes from the Latin word fiducia, meaning trust. This trust is not just between you and the issuer, it's a societal agreement. We all agree to accept these pieces of paper because we trust the system. We trust that the banks, the governments, and the financial institutions that issue these will honor them. But it's not just about checks. Banknotes or the cash you carry in your wallet is also a form of fiduciary money. It's just paper and ink. But it holds value because we trust that it can be exchanged for goods or services. However, like all forms of money, fiduciary money isn't without its risks. If that trust is broken, if the issuer does not honor their promise, or if people no longer believe in the value of that piece of paper, it becomes worthless. Fiduciary money, then, is all about trust. Without it, that check or banknote is just a piece of paper. Last, but certainly not least, is commercial bank money. This form of money might be the one you're most familiar with, even if you don't know it by name. Commercial bank money is the digital money that sits in our bank accounts, ready to be used whenever we need it. It's the money we move around when we make electronic transfers or write checks. Now, you might be wondering, how does this differ from the physical cash we talked about earlier? Well, unlike physical cash or coins, commercial bank money is entirely digital. It exists in the form of numbers on a screen, representing the amount of money in your bank account. You can't touch it or hold it in your hand, but it's there, ready to be spent or saved as you see fit. So, where does this form of money get its value? It's all about trust. The value of commercial bank money comes from the promise made by the bank to make these funds available whenever you need them. This promise is backed by the bank's ability to convert this digital money into physical cash, or what we call fiat money, upon your request. In this way, commercial bank money is similar to fiduciary money. Both types of money are based on trust, the trust that the institution issuing the money will honor its value. But while fiduciary money is a physical representation of this trust, commercial bank money is a digital one. In our modern world, commercial bank money plays a crucial role. It allows us to make transactions quickly and efficiently without the need to carry around large amounts of physical cash. It's the form of money we use when we pay our bills online, send money to friends or family, or make purchases with our debit cards. Commercial bank money has transformed the way we handle our finances, making transactions faster, easier, and more convenient. It's an integral part of our financial system, enabling the smooth functioning of our economy. So there you have it, commercial bank money, the invisible and yet ever-present form of money in our digital age. So those are the 4 types of money. We've taken a journey through time and concepts, starting with commodity money, the most ancient form. We've seen how it's physical, tangible, and has inherent value, like gold or silver. Then we moved on to fiat money, which is not backed by a physical commodity. Its value is derived from the trust and confidence we place in the government that issues it. Next, we explored fiduciary money, like checks or bank drafts, which holds value based on the trust and confidence placed in the issuer. But unlike fiat money, it's a promise to pay in the future. Finally, we delved into the world of commercial bank money, created through loans and credits, a digital form of money that constitutes a significant portion of the money in circulation today. Next time you make a purchase, you'll know exactly what kind of money you're using. Until then, keep learning and stay curious.